morning and welcome to today's webinar hosted by Insurance Times and market research firm Insurance DataLab. For those of you who don't know me, my name is Katie Scott and I am the editor of Insurance Times. The next hour, we will be taking a deep dive into the wonderful world of underwriting, exploring what it really means to be a best-in-class underwriter in today's digital age. A lot of today's discussion will be focused on the trends and insight revealed in Insurance Times' newly released Top 50 Insurers 2024 report, for which Insurance DataLab kindly provides the data. So, before we head into a panel discussion with leading underwriting experts from across UKGI, I'd like to introduce Insurance DataLab co-founder Matt Scott to talk us through the key findings from this year's Top 50 Insurers report. Over to you, Matt.
Thanks, Katie. We were delighted to once again provide the data for this report, which ranks the largest insurers and Lloyd's syndicates across the UK and Gibraltar by GWP. The big news from this year's top 50 is that Aviva has reclaimed the top spot as the biggest insurer, fueled by its acquisition of Probitas as it returns to the Lloyd's market after more than 20 years. The insurer replaced AXA, who fell to second after a number of years at the top of the rankings. The biggest climber in this year's report, however, is IQUW, which climbed 7 places in the rankings to finish 32nd after a massive jump in premiums. As part of this analysis, we also looked at underwriting profitability across these 50 insurance groups, and this once again found that specialist insurers are faring much better when it comes to profitability. Specialist commercial lines insurers led the way with an aggregate combined operating ratio of 88.5%, while those selling just personal lines reported a COR of 97.6%. Composite insurers, meanwhile, offering both commercial and personal lines, reported a loss-making 108.1% COR and a continuation of previous trends. When it comes to size, this year has changed things a bit, with those insurers outside of the top 50 largest insurance groups actually reporting a better COR than their larger peers, something which hasn't happened in recent times. And a lot of this has been driven by a much better loss ratio from those smaller insurers, even though they generally report a worse expense ratio than the larger insurance groups. We also looked at the performance of individual companies, rating them across 3 pillars of performance: their underwriting result, the 3-year aggregate underwriting result, and the improvement in that result over the last 12 months, with the top performers winning an Insurance DataLab Gold Award. Top of the pile for UK regulated insurers is Star International Europe, with an underwriting rating of 79%, followed by fellow Gold Award winners, Hiscox Insurance, with a score of 73%, and then Sabre, Allianz Insurance, Ecclesiastical, AXA XL UK, and Admiral UK, all scoring 71%. In Gibraltar, it was WDP Insurance that came out on top with a score of 82%, followed by Alwyn, Acaster European Insurance, and Haven, all of which scored 72%, and Trinity Lane on 71%. Then in the Lloyd's market, Beazley Furlong picked up the gold for Syndicate 2623 with a score of 77%. The other Lloyd's Gold Award winners are Talbot Underwriting with Syndicate 1183, which scored 77%, and then Markel's Syndicate 3000, MS Amlin's Syndicate 2001, Canopius's 4444, and Munich Re's Syndicate 457, all of which scored 76%. So well done to all of this year's winners, as well as Aviva, for reclaiming that top spot. And I also just wanted to point out that all of this data, including the underwriting metrics used to create the rankings and the IDL underwriting ratings, as well as metrics related to complaints handling and claims, as well as other indicators relevant to consumer duty, are all available on our market intelligence platform. And if you'd like a free trial, then you can email me at matt@insurancedatalab.com to set that up. And now I'll hand back to Katie for the rest of the panel session.
Lovely. Thank you so much, Matt. That was really interesting and a great starting point for today's discussion. And equally, anyone who wants to see the digital edition for the Top 50 Insurers report, that is now available via the Insurance Times website. So do go and check it out. So read all those lovely insights that Matt gave you a bit of a hint of there. Before we kick off the discussion, equally, if anyone's got any questions throughout the course of the webinar that you'd like to put to our panelists, do just pop it in the Q&A function and we will save some time at the end to go through them and put them to everyone. So I'd now like to introduce the rest of today's panelists who are going to be joining Matt. So I'd like to introduce Karen Dayal, who's the Chief Underwriting Officer for Commercial Lines at Aviva. We have Adam Clarke, who is Chief Underwriting Officer at Ageas, and Mohammad Khan, who is partner at PwC. So welcome, guys, and thank you so much for joining us today. Appreciate you taking the time. So to kick off the discussion, And how would you guys really describe a best-in-class underwriter? So what would be perhaps the traits or skills that make for really great underwriting, bearing in mind today's macroeconomic climate, which I think we can agree is pretty unprecedented in a lot of cases? Who wants to kick us off? Karen, do you want to start?
Yeah, I'll go with that. So I think this multifaceted, this answer, but best in class today are definitely those underwriters who have the strong processes and support functions around them that they can focus on underwriting rather than on transactions. I think they are people who are data literate, are really engaged in AI, they're really embracing innovation. So at Aviva, we've brought HX in as a pricing platform and Orchestra in as an EM visualization tool. And the underwriters who've really, really embraced the further insights these things can give them are the ones that we're seeing find real insights from that. And obviously, underwriters who focus on strong customer service, always best in class, in my opinion. Customer is number one. And underwriting teams that embrace DE and I, because I think the best teams take account of all kind of different views. And we know the statistics show you have better bottom line impact when you have a truly diverse team.
That's a really good starting point to build on. Thank you, Karen. Matt, do you want to add on this?
Yeah, no, I'd kind of agree with everything Karen said there, and also kind of just want to point to kind of the idea as culture as well, because I think all of those things need to be knitted together really. So that's really embedded in an organization. And the other thing I'd probably talk about is agility. So, with all the everything we're seeing at the moment, you called it unprecedented, Casey, and that's right. And within that, you need to be able to adapt in a proactive way to how the market's changing, how consumers are changing, and even things like how regulation is changing. So I think having that thorough understanding of the market, your competitors, where you sit in that, is key, so that it can inform your strategy really, and keep you on course for having that North Star of your ultimate aim for the business, your ultimate strategy, but being able to adjust course as and when it's needed. Alongside the things Karen mentioned, I think all of that's key just to knit it all together.
Because Matt, actually, it's interesting you said that, because in your gold award, I wondered if you had any kind of thoughts of including a DE and I stance or sustainability or anything like that.
Yeah, absolutely. It's definitely in our plans. So at the moment, we have the underwriting ratings, which are the ones I spoke about earlier. We also have similar metrics on financial performance for brokers and MGAs, and a customer experience metric as well. But one of the things we're working on at the moment is kind of an ESG metric, which will delve into things like sustainability, DE&I, and all of those metrics. We're just working out what is best to measure at the moment, and also the availability of that data to get a kind of a rating that will encompass all of the different elements, really. So work in progress, but yeah, definitely something we're working towards because, as you said, it's really important.
Yeah, no, I mean, a couple of things for me is the two key words are focus and agility. Yeah, and they're words that has already been used, so nothing particularly new, but we really focused on your market, understand your market, understand your data, the granularity and the sophistication of the pricing. Yeah, sort of going back to sort of quite, traditional basic underwriting. These are things that we need to do, but just the scale we can do them and the speed we can do them now, given our computing power, has just enhanced massively. And given the uncertainty, it's all for me, it's about scenario planning. You've got to think about what the future might look like, have different scenarios in your mind, have different outcomes and different actions that you'll take depending on which scenario, and then the ability to act on that and to make quick decisioning and actually deploy that into the market. That's where I think you get competitive advantage, and it's having that agility, the flexibility, and the ability to deploy your knowledge very quickly into the market. I think gives people competitive advantage to be best in class.
I think that's right. Oh, sorry, Karen.
Sorry, well, I was just going to say, I think, where there is lots of uncertainty, it's really important our insureds understand their risk and we understand all of ours. And the only way to do that is portfolio kind of management and accumulation understanding. So I completely agree with you, Adam.
Yeah, I mean, I was going to add just on the agility point. I think it's quite an interesting time to work in insurance at the moment. So we've got lots of, I'm going to call it alternative data sources on tap. And the ability to be able to assimilate all of that knowledge and make sense of it, I think is a really key challenge for all underwriters. And then, of course, you've got the technological change. I mean, these things have more processing power than putting someone on the moon, which seems ridiculous when you think about it. But that's the case, right? So a VW Golf from, I think, 2 generations ago has more lines of code than Apollo 13, which is just completely and utterly nuts, right? So, I think it's a really interesting time for underwriters, but to both Karen and Matt's and Adam's point, the agility, I think, is even more so because there's so much going on just with data and technology. And then you think about the macroeconomic environment. We had a golden period of low inflation, and suddenly you've got inflation doing this, depending on which line of business you write. You've got supply chain claims inflation, and you look at what's happening, unfortunately, in the Middle East. You look at piracy going up. You look at the Ukraine situation. You look at more wars breaking out all around the globe, and you think, well, how do you make sense of all of that, and then assimilate all of that, and then make tweaks to your pricing model to then come up with the underwriting price? That's the challenge facing everyone. So I think the other key skill, which we haven't dwelt on, but I think is really important, is just communication, like more so than ever before. Because no one individual can assimilate all of that. So it's all about the team, being able to talk to your claims colleagues, dare I say it, your actuarial colleagues, or business partnering colleagues, getting as much of their intel as possible as well to be able to make that informed decision. I mean, I would say it's never been a more exciting, but also I think genuinely hard time to be an underwriter as of right now.
And don't you think, I think one of the challenges that comes with that, there's so much data, there's so many metrics, getting lost in that and really knowing where to focus, I think is key to winning.
I agree, Karen. So, the best underwriters, as has always been the case, right, know what to zoom in on, or sorry, Adam, to use your term, it's a much better term, know what to focus on and what to ignore. But I think the key problem, though, at the moment is because we've got such a changing world environment, those key pieces of data, what you need to focus on, that's changing. And that's why I think, no one individual is going to do it. It's about, I know this comes through in your report, it's about the team environment and the culture that you create. I'm sure that there might be some underwriters on this call going, no, I'm a star. But I think it's all about the team now, and the team is the star. Those, I mean, for me, the best in class is about those that can create the right culture, which we talked about before, so that, it doesn't matter if someone leaves, you've got that team culture and being able to transmit that to people coming through. Those are going to be the real winners.
Definitely. And I mean, obviously, you've all touched on some of the macroeconomic sort of factors, really, that are having an impact. But what is really the main driver, really, in terms of what's hitting underwriting? What is making those pricing changes and impacting the strategies that you guys are having to implement sort of in your businesses, really? What is the sort of the end result of these macroeconomic fluctuations?
I think the biggest one is inflation. Trying to make sure that we're giving our customers the best price possible and trying to minimize passing on the impacts of inflation onto our customers. So at Aviva, we've tried to push all of our claims through our wholly owned repairers in the motor side. But yeah, it's difficult. It's a challenge.
Yeah, definitely. Adam, do you have anything to add on this one?
Yeah, I definitely agree. Inflation has been the key driver of the pricing environment we've seen. And we've always tried to Ageas be sort of sensible. We try to spot things as quick as we can and take the right action rather than sort of store up a problem and maybe take a much more bigger pricing action 6 months' time. We tend to sort of the house style is to go early if we can and smooth those rate increases in over a period and work with our brokers to explain what's going on to help them understand the drivers, but to be there as a long-term consistent partner. And that's really our sort of strategy. And I think that's the key bit is you have to have discipline in markets like this at the moment. You have to make the right decisions. You have to make the tough decisions sometimes as well. It's not easy to think we're going to have to put rates up by quite a significant amount, as you said, Karen, really impact customers and the price they're paying. But you've got to do it to be there for the long term and to balance the growth and profitability. And that I think is a real skill at the moment, to be disciplined as well as we go through.
I think that's right. I mean, I think building on what both Adam and Karen said, I think it's understanding the drivers of inflation.
Yeah.
I think that's really hard. So like, I can give two really quick examples. But the first one is, you know, what some people might have realized. So for those of you on this call that do the shopping, I am one of these people. You might have noticed that in January and February, prices went up on goods that were imported into supermarkets that we buy. And that's an impact of part of the Brexit deal that we've done. Yes, I did just mention the B word. And, you know, that will come through to us in the supply chain and insurance side, but it'll be delayed. How many of us are aware of that? How many of us are pricing that in? The second one, for those of you might remember, there was an outbreak of avian flu in March in Changwei province in 2 counties. Forgive me if I've mispronounced that for Chinese colleagues on the call. You know, China shut down 2 counties. What's produced in those 2 counties? Were we aware of what's produced in those 2 counties? How long were they out for? So they were out for about 3 to 4 weeks. They were locked down. So lockdowns are still occurring in some parts of the world. That obviously impacts our supply chain. It obviously impacts claims inflation. If we're not aware of things like that, then how can we genuinely price and underwrite? And I think that comes back to the point that we were all making earlier. It's a much more exciting time to be an underwriter, but it's quite difficult. So it's the focus on, do you really understand the drivers of what's impacting your business? And can you take account of them? But the key thing is also, are you aware of it? Right. So it's, you know, I remember talking to some people 2 years ago who freely admit they weren't aware of the components of what made up CPI. They definitely know it now.
I think that's really interesting. You hit on supply chain, and we're in a really, really complicated environment. Things are changing all the time, but that is where tech and data can now fill those gaps. So there's some really interesting tech startups in the supply chain kind of world, understanding who are the key suppliers to all of our insureds and our own supply chains are really important, I think.
I think that's right. And also, oh, sorry, Adam, you go.
I was just going to give you an example of where we've used AI to sort of look at the claims inflation we have, but to adjust it for the risk mix that we're changing. Because, you know, again, it looked a bit higher, but we were sort of increasing some of our risk mix and actually using technology to deconstruct that inflation basket, a bit like your shopping basket, Mo. You know, find out what the things in there are and actually deconstruct to get to an underlying inflation level, you know, and then you can price more accurately. And again, it's a great example of technology and the granularity that you need to get to now to actually make the right decisions. And it's not easy, but the tech definitely helps us. Yeah.
I think that's right. I mean, and actually looking forward, technology could be really, really interesting. So you look at potentially the impact of generative AI and what that can do in terms of sucking in different sources of data and then learning from our underwriters to see what should we focus on and what shouldn't we. You know, that should make things easier.
I mean, you mentioned the Gen AI word there. That's always a little bit contentious sometimes, I've found, in terms of that buzzword mentality and building hype. I mean, for you guys, what do you think is perhaps some of the pros and cons of generative AI in particular in hitting the underwriting arena? You know, what's next in its sort of development? Are you seeing many underwriting use cases? What is the role really around AI and Gen AI in underwriting? I mean, Karen, let's go for you first, Karen. Yeah.
I'll go first again. Yeah. So I think, you know, Mo touched on there's more data than ever that we have to digest. So using AI to help us digest it and find trends and patterns so that we're not sitting there with lots and lots of different metrics. I think AI at the moment is being used in lots of places. We've got chatbots trying to answer customer questions. For example, does my policy cover X, so that we can deal with more complex customer queries or more free for that. We've got kind of the co-pilot stuff, so your own internal version, I'm sure everywhere has, of ChatGPT. What else are we using it? Machine learning models, which I think historically we've always used the latest analytics in GI, and I think people forget that. Machine learning is just the next step of that. In terms of the kind of risks or the things I'm worried about, I'm worried that with the younger generation coming into insurance, the way that they learn is different. And if they're kind of using Copilot, et cetera, as their crutch or their shortcut to learning things, are they able to spot if they're being given misinformation, and definitely not losing that kind of on the ground training that people get. And in insurance, you do have unprecedented events like the pandemic. So if we're based on analytics of the past, you're not going to kind of get the right advice in those kind of situations. So just having kind of guardrails in place when you're using things like this, and making sure that you're looking out for bias. I kind of waffled on a few things there. Sorry. I'll let Mo get a word in.
We love waffle.
No, that wasn't waffle at all. It was really good. I think you hit upon a really important point, Karen. So for those people on the call who are, I'm going to say mature like me, you'll remember a period where we did have varying and high inflation. There are lots of people who work for in our industry who don't, and the data won't be there. So it doesn't matter what technique you use. If the data wasn't there, it's kind of garbage in, garbage out. And that's exactly to Karen's point. I think the thing about generative AI is, I think the thing to remember about it is it's still evolving. So, if you looked at the chatbots and the generative AI chatbots, let's say from last year, they found it quite difficult to do medium to complex mathematical tasks. You look at the development now, they can definitely do medium mathematical tasks. I've no doubt that they'll move on to being able to do complicated mathematical tasks. Karen, I think, hit on a really good key point. In insurance, we already are using AI. It's within the underwriting process. I'm sure Adam, when he will talk about some of the use cases, Karen mentioned a few with machine learning. We're not backwards from that perspective. I think people outside our industry often have a view that insurance is backward. We're definitely not. I think the exciting thing about generative AI for me is it should make underwriters' jobs easier. So in theory, we could get a generative AI model to learn about how an underwriter sifts through all of that data. And then for the underwriter, if they could get a generative AI model to do the first pass and then document how it'd come up with that auditable trail, spot the actuary from the audit trail, then the underwriter can review it and then make tweaks, and then the generative AI model can learn from that. So for our best underwriters, that means that they can underwrite more business, right? Which should mean greater profitability in our industry. That can only be a good thing for us. But I come back to Karen's point, which I think is really important. We need to make sure that people learn in the right way so they can differentiate from bias, and also periods where, as we're currently experiencing, you suddenly get claim events, you suddenly get, in my view, unprecedented supply chain claims inflation. We've never seen that before. No model's going to be able to predict that.
Yeah, and I also, I think there's also this thing of, there's a lot of hype around Gen AI. So just always thinking, is this task, I found myself doing this previously. I'm an actuary and I love dabbling. And I started kind of investigating, building a Gen AI use case for something, which I realized we didn't really need Gen AI to do it. We could already do it. And it was just going to spend a lot of money. So just keeping into kind of perspective when you're using it and how you're using it is really important. And back on Mo's point, I think all underwriters would say the same thing. Let's use it to free underwriters up to underwrite.
Yeah, I think that's the key thing. I think kind of with this technology, it's one, it's not technology for technology's sake, as Karen was saying. AI isn't always the solution. You got to work out what the problem you're trying to solve is first. But also it's about the way that you bring in this technology. So you need to bring people along with you, keep humans in the loop. I'd say it's all about enablement, really. It shouldn't be about replacing roles, replacing tasks. It should be enabling people to do their job better and quicker. And I think that's the key, really. With that, of course, you will get some of the mundane, more repeatable tasks being automated and being taken away from humans. But it all needs to have in mind, what the impact is on the process, and also what impact it has on the customer, because you don't want to be acting to accidentally to kind of customer detriment with, unforeseen circumstances like, the bias Karen was talking about there and anything like that. So that's key, really.
That's really interesting, Matt. Adam, do you have anything you want to add?
Yeah, I mean, I think the definition between AI and machine learning versus generative AI is quite interesting. Yeah, we've had that machine learning in our businesses for 8 or 9 years, in some cases. So I think we're pretty well developed there, and we've built all of our risk cost models that using both actually the old-fashioned linear models and the new machine learning models. And actually, what we found is the blend of both is actually probably more predictive, because they each have a place to play. So there's no particular one way or the other. We use the best modelling tools available. It gives us the best results. But we have a phrase called sort of AI for everyone in our business, and and it can range from exactly that, from the pretty mundane tasks just to helping you answer your emails a bit quicker. That I'll take that definitely. That's something good for me. But it can go right up to building Gen AI models, and we've probably found in our claims space, we've found more use cases at the moment than in underwriting in terms of Gen AI. So we're sort of focusing our efforts there really at the start. It's not to say we won't find them, we won't get there, but actually, where do we think some of the sort of initial use cases are, and where we can really see some quick benefits coming through? It's probably more in the claims space than the underwriting at the moment, but I think that will change.
No, definitely.
Yes.
That's really interesting. Sorry, Mo.
What I was going to add was, I think Adam's absolutely right, and of course the flip side to this, unfortunately, is there are tools like fraud.gpt, right? And there are tools out there that, for example, can manipulate images. So there's a tool out there that can take your car, take another car that's had a crash, superimpose the images so it looks like your car has had the crash. And unfortunately, we're going to see more and more of that, and it's quite difficult to differentiate and work out, whether that's a genuine crash or not. So I think on the claims side, I think unfortunately we're going to see more and more attempted fraud, and it's more sophisticated. So we're going to have to keep up with it.
And keep our claims processes kind of smooth and efficient. Yeah. It's a hard one.
Definitely. I mean, aside from, I know it's easy to say, but aside from like AI and perhaps Gen AI and the machine learning, are there any other types of technology sort of coming down the line that you think are particularly impactful when it comes to underwriting functions, or that could play a particular role or a big role really in the future of underwriting? Or is everything going to be centered around AI? I mean, there's data analytics as well, I guess that's come more to the fore, and that the function, I think, of data science has become more embedded in insurance businesses. What's the evolution there as well?
For me, I think it's Gen AI, yes, but more than anything, it's about the infrastructure you have in place to use these technologies. And if you don't get that wrong, and you don't have the right databases, etc., you're not going to get anything right. So I think getting that right is really, really key.
Yeah, I agree. We do over 20 million quotes a day, and when you think of the enrichment you need, the data sources that need to feed into those quotes, and actually you have to do that within 2 or 3 seconds at most. It's massive. It actually sort of boggles my mind sometimes quite what we built, the infrastructure, and how much you have to keep moving though. You can't just sort of stand still. And I think without that infrastructure that Karen talks about, you've got a problem. If you haven't got an infrastructure that can grow with you and can adapt as the world changes, as more data sources come in, as more regulatory, sort of pressures come in, you have to be able to deal with all of those. So having a single data platform, tools that people can use and access, and these are all really important component parts that I think will future-proof going forward and allow us to adapt to potential changes coming down the line.
Yeah, it's key again. Sorry, Mo.
No, you go.
It's key getting the kind of correct CIO type advice to make sure that the selections you're making are future-proofed, because I think we always have thought we're choosing the right platform at different points in time, but technology moves so fast.
I think that's exactly right, and I think there's a balancing act, isn't there? And both Adam and Karen mentioned this, that you want I'll call it the latest whizzy tech, to be able to process things very quickly, make sure it's in a complete workflow, etc. But you've also got to balance it, especially because of regulatory scrutiny, but also just to understand what is going on, that you've got a process that is understandable, so that if something goes wrong, you can identify where it's gone wrong. You don't want to have like the world's biggest black box. And I think that balance and that tension is I think what we're all trying to strive for.
Yeah, it's the same in pricing models as well, right? You could chuck everything in there, but you really need it explainable, and also not have any bias in it, so you know exactly what's going on in your models.
Definitely. Now, a few of you have mentioned the regulation words. I don't think any insurance conversation is complete without going through what's happening in terms of regulation. Obviously, there's been a huge amount of change coming from the FCA in terms of its fair value ethos, consumer duty rules. In turn, this equates to a lot of internal changes, I think, within underwriting businesses.
Yes.
So I just wanted to get your views really on this onslaught of regulatory change and how you think the market is really doing when it comes to bedding in the rules. Because let's face it, the FCA has been quite vocal in the past about not always being impressed by the market reaction. Matt, I think I'll come to you first on this one.
Yes, I mean, it's a big challenge, isn't it? The amount of kind of change that's kind of come from the regulator lately has been a big challenge for everyone, I think. And I think it's clear that there's probably more work still needed from large parts of the industry. But I do believe that as well as being a challenge, it's a big opportunity as well. And it's all about, I suppose, kind of embracing it in the right way. I think, you look at kind of offering good customer outcomes and delivering fair value. Everyone would agree that that's a good thing. And that's what, people in insurance strive to do. And it's just a case of embracing that and putting the changes in place to really make the most of the opportunity that's there. But I think to do that in a sensible way with the amount of work that's involved, it's all about, as kind of spoken about in other areas, is, having the right processes, having the right intelligence, the right insights in place to make the most of it and understand where you sit, where others sit, and what changes you need to introduce to better yourself. And also, avoid the gaze of the regulator as well. We work with a lot of clients on this, and I think one of the key things is you can't stay siloed. This covers, all parts of an organization and also the supply chain as well. And if you're operating in silos in the different departments, I just don't think it's going to work. So, as an example of that, we know that the regulator is looking at the link between, for example, underwriting profits and complaints going to the ombudsman. So, if you see a company, any given insurer delivering really high underwriting profits, but at the same time they got really high complaint levels and loads of those being upheld by the ombudsman, we know that the regulator is going to be taking a look at that as, we at least need to have a deeper look at what's going on here. It could be a problem. And the big thing is if you're not aware of what the rest of the market's doing, you don't know how you're performing either. I mean, kind of you could think that your upheld rate with the ombudsman, for example, is fine, you're at a comfortable level, but you might actually be 10 points above the average for that particular market, that particular product line.
Yes.
So I think having that awareness within an organization and how you compare, and also as Mohammad spoke about earlier, communication across different departments, I think that's key really, because otherwise you're going to have duplication of efforts across the business, people not talking to each other, and there's not going to be any real change, and that's going to kind of not benefit the customer and ultimately not benefit the business either, because we've seen in our research, if you take kind of better company with better customer experience, they deliver higher profits. It's all about kind of building loyalty, and with the dual pricing, that's even more important these days. And that can really help to drive profits and customer experience and make for better for everyone. Really, it's a win-win.
And don't you also think that having better data and better tech processes and using these new innovations might actually help us answer regulatory inquiries better and more easily, so remove that strain a bit?
Yeah, if you've got it all to hand already, if the regulator comes knocking, it's so much easier than scrambling around to find it, on a rush. And you're going to answer the questions better as well. So yeah, easier and better answers. So definitely.
I think that the regulator, well, let's split it into two. If you look at what the FCA are doing, they have been crystal clear about what they want, right? And whether we like it or not, and general insurance is under the spotlight and it is leading the way with the FCA in terms of the subsector. Another way of phrasing it is it's our time to shine. But, they are absolutely crystal clear. So, to take Matt's point, they are monitoring level of complaints, including on social media. So I think one of the biggest differences for Consumer Duty is that one must be seen to be proactive with dealing with complaints. So the FCA is monitoring social media output and the complaints there. If you're not seen to be dealing with those, there's going to be an issue. Everyone knows about total loss. That's in the market right now. Premium finance is coming, right? That is crystal clear. That's going to come to us. So, for those insurers that are at a sort of 40, 50% APR rate, I put it out there. I don't think that's going to be acceptable to the regulator. It's going to be pretty hard to justify. Something's going to need to be done about that. I think the other thing that we all need to be worrying about, in my view, is also when we think about cash settlements. So this is much more on the claim side. But traditionally in insurance, we never really worried about affordability because we've said, well, if you couldn't afford the premium, you won't pay for it. But now we're in a situation where, for example, if the customer asks us, well, will you do me a cash settlement, and we do it, and let's say their house has burnt down, they can't get a builder. 6 months later, they get a hold of the builder. The cost to rebuild is more than the cash settlement. That could be an issue for us. If we assess vulnerability of that person, if we assess their ability to be able to make those financial decisions. So I think it's these are the things that I think Consumer Duty is capturing for all of us. And Karen, to your exact point, right? I mean, technology can help us, but I think the key point is if we're seeing trends occurring, we have to make sure that we're dealing with those trends and complaints, because if we don't, then I think the FCA is going to come knocking. I think the converse side, just on the PRA point, is look, claims inflation, supply chain claims inflation, I think is here to stay for a while. That is going to be entertaining for us on reserves and capital. The PRA are going to come looking at that, and that's just something we're just going to have to deal with.
Just in terms of the regulatory space, I think the FCA in particular, one of the biggest changes I've seen probably over the last 2 or 3 years, they've become much more data-led. They are collecting huge amounts of data from all the companies in the industry. They've got the ability to analyze it, to collate it, and to compare, and to understand, where outliers are, and that's a big change. It used to be they would have to sort of be quite probing in their questions. Now they're just collecting data and they can spot where things are going wrong, and that's a big change actually, and it makes you sort of think things differently. You have to be able to use the technology to provide those data. The data requests obviously coming with relatively short time scales, and you've got to generally provide quite a lot of granular information. So being able to, one, service that request is something you need to be set up for, but two, you shouldn't be waiting for the regulators to ask you to be looking at this data. You should be looking at it yourselves and really managing your business that way in a sort of day to day. And it is at a granular level. And you can no longer say, well, my company loss ratio is fine. No, it's down to individual cohorts in individual products, and you've got to be able to look at your business and say, I've got good customer outcomes at that more granular level, rather than necessarily maybe like we might have done 3 or 4 years ago, look at more at a high level total company view.
I think it's a really good point, Adam, in terms of just the evidence. So, I mean, it comes back to sort of Matt's and Karen's earlier point. We've got to make sure that we've got the ability to produce the data in an easy to understand way for our regulators. And I think that's half the challenge, because we've got so much data. And what may be intuitive to us may not be intuitive to them. And I think, to be fair, that's probably where some firms have found difficulty, where they presented stuff to the FCA and not realise that it can be interpreted in a different way.
Yeah, I think what's fascinating to me is kind of with all the data enrichment you can do using machine learning models, looking at behaviour of customer, and kind of the innovation in the space of being able to identify a vulnerable customer. I think it goes much further than we realise. If you really think about it, I was reading something the other day about how a consumer clicks their mouse when they're filling out a proposal form, and if that could be an indicator of how vulnerable they are, how long they hover over things, like that's mind blowing to me. But if we can start to use that stuff to really make sure we're treating the customer well, it's brilliant.
That's really interesting. And have you guys seen any sort of unintended consequences really hitting as a result of all the regulatory change that's been going on? Are there any sort of, in particular for the underwriting side?
Yeah, I mean, I think you are seeing people pull out certain product lines. We have seen, there is probably less competition out there in that people have made the decision of, it may be a relatively small line, small amount of premium, and they've looked at the sort of regulatory burden of compliance and what work they need to do versus the effort and the profit that product makes. And people have changed appetite, particularly on some of the smaller sort of add-on type products. We have seen less appetite in the market. So whilst that may be an unintended consequence, it is now then putting fewer players in that space, so less competition. But in theory, they should be the ones that are doing it better, because they can really focus on it. It's a much more core part of their business. So yeah, that'd be one change I've seen.
Yeah, I think it's a really good point, Adam. Like you look at gap insurance as a product, I'm not
Yep.
commenting on the price, but as a product, gap insurance is a good product, especially in a period where you've got high inflation and used car prices, new car prices are going like this, aren't they? So gap as a product is a good product, but at the moment it's very difficult to write it because of what happened historically and the way it was sold and the commission rates that were charged. And I think that's a really great example of an unintended consequence where we've got a nice product. There is a need for it in the market, but actually the number of players that can genuinely offer it, I think, has kind of plummeted, right? And people have withdrawn, and the FCA has some players to withdraw, right? I think rightly so, given kind of the way the commission structure works. So I think that's a point. I mean, the obvious one, this is much more of a pricing point, is the unintended consequence of new equals renewal pricing. We might as well go there. Overall pricing has increased. Right. Now, some of that is due to supply chain claims inflation, but some of it was always going to happen. And I think when the FCA introduced it, I think they expected that it would reduce, but that's not what was going to happen. Unfortunately, if you reduce competition, which is effectively what's happened, then prices go up. And more importantly, people can price properly. So I think what was happening before, definitely in the motor insurance market, was people were trying to compete on price and were underpricing it. And now they're having to price properly, and therefore the price goes up. And then with supply chain claims inflation doing this, which we've all talked about, it goes up even more, unfortunately. So we're all paying more for that as a society.
Yeah, no, that's really interesting. And obviously the FCA is also looking to streamline its rulebook to avoid duplication with consumer duties. So that's obviously sort of being worked on at the moment. I mean, how necessary is this? What is the impact on underwriters of this particular piece of work?
Yeah, I have to go. I mean, the amount of rules and the regulation, it's almost impossible for one person to know it all, to be perfectly honest. And that could be, someone in your compliance team, let alone an underwriter that's got, another part of their day job. So the ability to streamline it is definitely helpful. I mean, we've had to use technology really to help embed it into people's day-to-day lives and day-to-day processes. And, I think I've got something like 360 rules that I would need to comply with, and you just can't carry that level of detail around in your head. You've got to be able to have some tools and technology and process to help you when you're making your day-to-day decisions. Think about, well, where should I be going with this? So, in my mind, it's definitely welcome. I think there's a recognition from the regulator that they need to do it, and it will just help. Just make firms much more aware and accountable, and actually just, I think, streamline the compliance and the decision making processes. But there is a lot there, and so I think anything to do to make it more simple and less volume is going to be beneficial.
Yeah, that's a really good point. Thank you, Adam. I also wanted to just ask you guys about talent attraction and retention. Obviously, that's an industry-wide topic that's been going on for a while now, and that a lot of firms are thinking about in quite a granular way. But how would you compare today's underwriters with what is potentially needed from these types of professionals in the future? Sort of future-proofing really the profession, and what the main points of difference might be between today's underwriter and the underwriter of tomorrow.
So I think underwriters have always been technical people and used, the technology available at their time. The difference now is the technology is AI and data and automation. So we need to make sure that our underwriters are skilled in those areas. And then because of the way that the universe is changing and evolving so quickly, we need to make sure that they're staying up to date with their training and they have a kind of growth mindset when it comes to learning. I think we need to think of them as kind of technical trailblazers and data pioneers, but also not forget that traditional underwriting knowledge is gold, and we need that available to everyone.
Yeah, I agree. I mean, we have a couple of programs in Ageas of the underwriter of the future and the pricer of the future, and where it's doing exactly that. It's trying to really just help people keep up to date and keep current. We have a sort of phrase, you got to keep moving forward to keep current. The world keeps changing, so we need to keep updating and refreshing our skills. It's no longer an underwriter that can use Excel. That's just not it's not good enough anymore. Whilst we might use it, there are just so many other tools, applications, different coding languages that are now, sort of quite embedded in the pricing roles that, someone joining, when I joined 20, 30 years ago, these things just didn't exist. And to be able to keep yourself up to date, future-proof yourself is really important. And, but that's where definitely Karen's got it right. The mix of new people coming in with these new skills and then blending them with the people that have got the history and the knowledge, and they've been through 2 pricing cycles of hard and soft markets. These are all things that you can't necessarily teach. You have to learn them by going through it, and blending those 2 people together and creating a team approach, as we were talking earlier, I think definitely gives you the best recipe for success.
I think we have to remember how exciting the job is. And I think the insurance industry has not covered itself in glory in reminding people about how exciting we are. I mean, we talked just before about how, Adam, you just said we've been using machine learning, AI, for the last 9 years. How many people would outside our industry would even think about that, or perceived as being behind banking? You can tell it really annoys me. I'm quite passionate about this. Right? We have to say to university graduates, look at how exciting insurance is. Look at how exciting underwriting is. Not only do you get to use your technical skill set, but you get to apply it to something and learn experience and learn domain knowledge for the public good. Like,
yeah,
the UK economy, the global economy, needs insurance. You can't say that about a lot of financial services sectors. So, insurance is required, and underwriting is really exciting right now, Karen, just as you described. And Adam, you've already thought about that in Ageas, which is why you've got your training programs. We need to attract the best and the brightest. And my worry is that we don't, right? My worry is that we don't, because the industry always gets a bit of a kicking when someone hasn't paid a claim, or we're perceived to be pricing too high, and people don't really understand what we do. And I think that is our biggest challenge and opportunity.
And I think it's the diversity of roles that are available in insurance as well. It's just so broad. I mean, I've been in and around insurance for 10 years now. I was a journalist alongside Katie at Insurance Times for a while, and now with Insurance DataLab. Before that, I was in a pensions actuary, or training to be a pensions actuary, and that was mostly kind of working out when we thought people would die, which isn't the most exciting of jobs to do.
You're not selling it. You're not selling it at the moment. You're not really not selling it.
To sell insurance. Let's not get back to sell insurance. Yeah.
And then, a spell at editing a management magazine, which I thought was going to be fantastic, and then ended up just asking everyone what their management style was. Where you look at insurance and all the different roles you can do across, even just, underwriting, there's loads in there. Then you look at kind of your claims and everything else, all the way from an insurer to a broker and MGA. I just think there's so much you can do, and how you can move around as well, and take the different experiences you've learned into new roles and transfer that knowledge in. I think that's kind of almost unparalleled in types of the different types of work you can do. And I think Mo's right. We do need to sell that better. I don't think people are aware of that necessarily. And then on the social good side of things as well, I mean, yeah, insurance does get a bit of a kicking, kind of in the tabloids and stuff about not playing games and that. But without insurance, the world just wouldn't work. And I think the social good it can do in terms of helping young businesses, helping kind of vulnerable people, I think that is something as well that could be lent on more heavily in terms of the benefits it brings, and appeal to the younger generation who do have that, I suppose, more wanting to do good in their work. I think that's key as well.
I'm so glad you brought this up, because about 2 months ago, myself and my husband had a massive argument with a group of friends because I was stating that insurance made the world go round. And I absolutely do believe that we wouldn't have innovation, and we wouldn't be able to do really risky things. When a tsunami hits in Sri Lanka, it's your claims adjusters claims handlers who are there. Couldn't agree more, but we need to sell that story.
I think the other thing we should remember is, in the UK, we're one of the leaders in insurance.
Yeah.
So you think about our motor and home insurance markets. I think it's the most competitive in the world. If you're an underwriter or a pricing person in personal lines, you really have to be on top of your game. Other markets are easy compared to the market we have in the UK. You look at our London market, it is a global leader in specialty lines of business. You look at what we do on commercial, and the mixture of techniques that both Adam and Karen will do with their teams, and using both commercial line techniques and personal line techniques, for example, to price SME business. We should be proud of what we do, right? This is the message we have to get out. We're there when people are in need.
Yeah.
You only, I mean, I know I'm talking to the converted, but I remember when HIH went down in Australia, and you read some of what happened. You know, people there were families sitting in the charred remains of their houses because insurance wasn't being paid out, and they couldn't move into alternative accommodation. They couldn't afford it. That's what insurance does. I think we just have to sell that. We have to sell the vision again. Sorry, I'm going to get off my soapbox now.
No, I'm right there with you, because even in terms of climate change and sustainability, like, we're there helping our customers think about climate adaptation, and we're there with government and with the industry thinking of solutions for the future. So yeah, I'm there with you, Mo.
Well, I'm going to change the world. I'm going to change the world.
Now, I do want to ask you guys about sort of what the opportunities, perhaps what the main opportunity you think is coming down the line, really, for underwriters that want to be these best-in-class underwriters in today's climate, really. What you think the key opportunity is. I don't know if anyone wants to sort of take it in turns, and we'll go through everyone. And then I've got a couple of questions from the audience I want to put to you as well, just before we finish.
Why don't I go first?
Go for it.
It's everything we've just talked about, which is a really cop-out answer. But you think about we're living through a really exciting period of both technology change and the ability to use data from different sources that, frankly, we would have all loved. I know Karen, Adam, and I would have loved to have had 20 years ago, right? And we've got that at our fingertips. But the key point is, how do you make sense of it, and how do you know what to focus on? And that's why I think now is the best time, the most exciting time to be in underwriting, because what we do now, the technology we're going to put in place now, the systems that we're going to put in place, the data that we're going to use is going to enrich and help us price future and current risks in an amazing way, right? So, like, you just think about, like, yesterday I saw Elon Musk had launched in SpaceX, you know, the rocket that went up and then came back down. Who can insure that, right? Which underwriters in the world will know how to insure something like that? There are quite a few of them in London. There aren't that many of them around the rest of the world. That's the excitement that we've got, right? How amazing is that? And we know we can do that. So that's what I would say. It's just the excitement of the change and grappling with the change and plotting a course through that change for the insurance industry. That's the challenge and the opportunity for underwriting at the moment. That's my grand vision.
I think it's, the opportunity is absolutely embracing all of these projects being presented to you for automation or for new tools to use. Don't go in with the mindset of, oh, the data's wrong, this will never work. Like, have an open heart and an open mind, and your underwriting journey is going to be transformed.
That's a great one. Adam, should we come to you next?
Yeah, I think it's really just being proud of what we do, actually, and looking at it like we are helping society. We are, making people's lives, you can make them live and help achieve their goals and their dreams. And there is so much change coming. I mean, even electric vehicles they're here and now, but that's really interesting. If I was we're motor underwriters, we want to understand it all, and how do the vehicles perform differently, and learning all of that. There's just so much that we can do, and it is just interesting and exciting. But I have noticed that people want to play their part in society now, so it is going back to the sort of ESG agenda, and it's just really, I think, more formally linking what we do. And then that gives people energy. People are excited to do that and play their part in sort of shaping the future.
Really interesting. Matt, do you have anything you want to add?
Yeah, I think the biggest opportunity is just how challenging everything is at the moment. I mean, not everyone is going to get these things right, whether it's kind of embracing the wrong technology, creating the wrong products for new risks, not getting things right around diversity and all those kind of things. And for the people that don't get it right, it's going to be really hard. But for the ones that do embrace it and do make the right decisions and do adapt in the right way, the opportunities are going to be huge. And I do think we're going to see companies being a bit more divergent in their results going forward and how they fare. And I think getting it right is key because it's going to be a real struggle for those who don't. So yeah, that's the biggest opportunity for me, really.
No,
And can I
thank
just
you.
add, look at how diverse we are,
Mm.
right? And we've been in the industry a long time, and it is getting better.
Definitely.
Yeah, definitely. Totally agree. I'm just going to go to some audience questions now. So we've got one that's come through. Do you know the pricing, cost, or benefit of your reputation, or do you rely solely on low cost? Don't know if anyone wants to pick that one up, looking at reputation really and the impact of that on underwriting.
Yeah, so we do measure it. So we know there is value in a brand or reputation. I mean, you could say brand is reputation, and we know that when people are looking on price comparison sites, they don't always choose the cheapest. They will sometimes move down, and there will be a price they'll pay for that brand or the reputation. So yeah, we can manage it. It's it's something we look at quite often, and there is a value to it. So yeah, I think you need to be very careful that you don't do anything that clearly damages your reputation, and you enhance your reputation out there. But it's a premium, but it's not, there's a limit to what people will pay.
No, definitely. And I've got another question come through, perhaps more for Adam and Karen. Someone's asked about the thoughts on M&A in the market, with both Aviva and Ageas being acquisitive recently, and what you think the drivers will be over the next 18 months of M&A.
I'm going to be cheeky. Are they asking what you're going to bid for next? They're trying to get that price.
Maybe that's what they're hoping for.
I'm going to go with the official line that we obviously don't comment on market speculation or rumours, so it would be inappropriate for me to talk about anything in specific to Ageas. But in terms of the trend, yes, you're going to see, I suspect, a continued trend. We've seen it in terms of brokers. There is some consolidation going on in the broker space. I think what you're seeing in the insurer space is sometimes some consolidation, but also a bit more focus and specialisation, that people are choosing to maybe make their decision to be a personal lines insurer or maybe a more focused commercial lines insurer. So there is some movement, and people are, when they're making those choices, then they're thinking about how do I grow scale in that area of focus. So I think that it'll be a trend that we'll continue to see.
Yeah, and for us on our acquisition of Probosas, a very deliberate move to give us access to the Lloyd's market.
Katie, if I could just chip in, just from an advisor
course.
perspective, we're definitely seeing confidence return to the market. So not just in insurance, but across UK PLC, which I think is just really positive for all of us, right? Because our industry doesn't work in a microcosm. So if you look at, for example, the number of listings, we're advising 40 to 50 clients at the moment who are thinking about listing in 25, 26, which also has an impact on the M&A market, of which 5 are insurers. So I think it's a really positive trend. Just coming back to Adam and Karen's point, I think if you look at the personal lines market in particular, there is a lot of capacity. Some PLs have withdrawn from some markets, but if you look at the Price Aggregator's website, there's still quite a lot of capacity. So there is the potential for M&A. My only observation is, if you look at, and Karen, I will spare your blushes, if you look at Aviva, Admiral and Hastings, up until year to date, they've demonstrated that you don't need to be acquisitive to grow rapidly. And I think that's the only balancing act, I would say.
It's really interesting. Thank you. I'm going to be really cheeky and squeeze in one more quick question from our audience. So we've got someone agreeing with you, Mo, about the UK insurance market being really exciting, a really great place to work. But they want to know suggestions on how to change the mindset of those who might not know or agree with that perspective. Just sort of getting people on board really with thinking of UK insurance as being interesting to work in and that great exciting place we're talking about. How can we change people's minds?
So I'll go first. Do a Karen. So understand that we represent, right? So how many of us go to universities? How many of us go to schools? How many of us go to trade fairs, other trade fairs, where we can pick up talent? And if we don't do it, the onus is on us, right? Nobody else is going to do it for our industry. The onus is on us. So I would encourage all of you, if you don't do it, and I'm not saying suddenly, we're all really busy, but go to one school, go to one university, go back to the university or school you came from, talk about how exciting your job is. That's how we make a difference, right? If each of us does that, we're one of the largest, our industry is one of the largest employers in the UK. Can you imagine if each one of us went and spoke at a school, each one of us went and spoke at university, 2 evenings a year? What a difference would that make?
Mm-hmm.
And the reason I wanted to go first is because I knew Mo would steal all of my points. Exactly echo that. Like, I was going to genuinely say that. But yeah, getting out to universities, getting out to schools, telling our story and not being shy. I do feel like we've been a bit shy to shout about the good things that insurers do. Let's lean into that space a little bit more.
I'm conscious we're slightly over time. I think it's so important, just before Anne comes in, you can see what Louise Hay, the Transport Minister, has said about our industry. You know, there was an article in the Daily Mail about 6 weeks ago where she said there were 3 reasons why motor insurance was going up so rapidly, and one of them was price catch by the industry. She probably doesn't know our industry very well. That is for us to educate, right? So I'm not going to sit here and criticise. It's not that at all. We have to educate. That is our challenge with our current government, because if we don't, then others will seek to educate from their perspective. So if we don't say what the public good that we provide as an industry, there is a danger that our current government will think, actually, we're not doing a good job, we need to intervene. Sorry.
A really good point. No. Adam, do you have anything you want to add?
I think it's just selling what we do and the value. I mean, I was chatting with our pricing apprentices a couple of months ago, and you know they all joined at 18, straight from A level, so you know a different route maybe to most people, not the university, and their perception of the industry versus what they've now found is just completely different. You know, and they are really now keen on telling people what they are finding and sharing their experiences. So I think it is that we just got to get better. Everyone, as Mo says, everyone sharing what a good job it is, what a good profession it is, and how you can make a difference. And just that perception versus reality is just completely different.
Yes, but telling the stories and embracing diversity and embracing the younger generation and kind of, as everyone said, getting out and speaking to people. That's the only way to change things on this front.
I was going to say exactly that, Matt, as well, coincidentally. But yeah, the embracing diversity, making sure we keep like female talent in particular throughout their careers and support that, and it's really key, I think, too.
No, definitely. Well, thank you so much, guys. We've run a little bit over time, so apologies, but I was just finding the conversation far too interesting to stop dead on time. So that's my bad there. But thank you so much for giving up your time this morning. And I hope everyone listening has enjoyed the conversation as much as I have. And yeah, do make sure to check out both the Insurance DataLab website or Insurance Times to check on that Top 50 Insurers 2024 report launching today. So thank you so much, everyone. Been really great to chat through. Enjoy the rest of your days.
Cheers, guys. Thanks, everyone.
Thank you.
Thanks, everyone.
Bye.
Bye.